All right, so we're going to get started. It is 7:03. Fantastic turnout. I appreciate everyone being here. And, you know, this is basically 1 year since we made our transition to left field investors. We used to be called CPIG, which was Columbus Passive Investing Group. That's not a good name. At least the initials aren't. But left field investors, really the way it is now, we started about a year ago. So we started about a year ago, and we've grown a lot. Sean's going to get into the numbers, but it's just phenomenal. We really weren't trying to grow for growth's sake, but we do want to grow and get quality people like the ones that we have in this group. And as I tell people when I talk to them, I am completely biased about this group. I think it's fantastic, but the culture that we've built is because of the people in this community, and that's the people on this call. And that is the main thing, that as we try new things and as we grow and change, it is critically important to all of the founders of left field investors that our culture remain the same and that our mission remain the same. And that mission is to provide a network and to provide education for people that are interested in building wealth through real estate syndications, right? Real assets that produce cash flow. That's what we're about, and that's what we're always going to be about. Now, we're going to talk today about some new things we're trying. And as with everything in this group, you know, this is probably not the right way to say it, but, you know, we don't know what we're doing, but we're trying stuff. And some of it works and some of it doesn't. And we rely on you guys to tell us what does and what doesn't. And we're going to keep trying, and the things that work, we're going to keep doing. So, you know, the first thing, this is the first meeting of 2022, obviously. So the first thing I always try to remind you is the next meeting is February 28th. Guest TBD. We'll let you know on that. So today, what we're going to talk about, this is kind of our state of LFI meeting. We did this last year to roll out our group, and now we're doing it to kind of summarize what 2021 was like and talk about where we're going moving forward. So you're going to hear from some left field investor members that have gotten into their first deals. John is somewhere. I saw him. Yeah, John Bolt and Alvin Villaluz are both going to talk to us about their first deal. And Alvin's going to talk a little bit about his first tribe. Then we're going to have some of the founders come up and talk about deals that they went full cycle in or got into. And also Ryan Steve's going to talk a little bit about our the tribe that he and I are a part of, just so you can kind of understand different ways that tribes are used. Then Sean Donnelly is going to talk about our survey that we sent to the infielders, and he's going to share the results, and they're pretty amazing, I think. And then we're going to do the survey drawing for a free swag for 1 or 2 people. And then I'm going to come back in and talk a little bit about plans for 2022, which include, we're going to focus on networking. We're going to focus on access to deals for our members. And hopefully, maybe we might do an in-person meeting. And then we're going to talk, like I said, we have some ideas for networking. And at the very end, Steve Sue is going to show us what Wonder Me looks like, and we're going to do our networking there. So there's a lot to cover. So I'm going to stop talking, and I'm going to turn it right over to Alvin, who's going to talk about his first deal and his first tribe. And just so you know a little bit about Alvin, he lives in LA. He and I used to work together 20 years ago, and we hadn't really talked for a long time, and we reconnected through LFI. So that's another benefit of this community. It brought me back together with Alvin, and now he is a passive investor and a TribeVest member. So Alvin, I'll turn it over to you.
Thanks, Jim. First, I need to apologize since I can't make the entire meeting, so I need to log off in about a half an hour to make another appointment. So my apologies if you see me leave a bit early here, but Jim's asked me to keep this within a few minutes, so I'll do my best to try and summarize my experience as quickly and as best as possible. I first started my journey into passive investments in March of 2021. I was basically frustrated and concerned with the current investment situation that I was in, which was 100% in the equity markets. And given the current state of the market today, I'm glad I actually started looking early on for alternative vehicles of investments. So like Jim said, when I was able to reconnect with him about a year ago, I heard about all the cool investments that he was getting into. And, you know, just listening to him to talk, I was completely hooked. I mean, it sounded like Jim was talking this cool, hip, different language. And I was like, I want to learn that language and I want to learn it quick. So luckily, I've known Jim for a while. And since we both worked together previously, like he mentioned, it was through many conversations and through his mentorship that he introduced me to two very important life-changing tools for me. The first one being the Left Field Investors Community and website, and secondly, the TriVest platform. But before I dive into those two items, I just want to briefly discuss my background. Like Jim said, I'm in insurance. My current position is that of an excess liability underwriter in the property and casualty insurance field. So I've basically been an underwriter for about 30 years. So as a trainee, it was always explained to me that underwriting is 60% science and 40% art. Science meaning the analytics, the metrics, the data-driven reports, etc. And the art basically just means that things aren't always black and white. There are some intangibles that you need to consider when underwriting a deal. So with that in mind, the Left Field Investors Community and website is crucial for me, since it is basically my main source of science, if you will, when underwriting a deal. I'll review the website, I'll look for posts on current deals, or post a question on things that I may not understand or wish to discuss a bit further. It's basically the main platform that allows me to gather my scientific data. It also provides the artistic side of underwriting for me, since it offers insights on who the good and bad sponsors are. In my 30 years of underwriting, I've learned that you can underwrite a deal to death and you think you have everything covered. You got all the answers, but things can still go sideways for whatever reason. Jim knows that a lot because he wrote a lot of bad deals in the past and it blew up, but that's a different story. So that's why I was always told by my former managers that one way of ensuring success is to do business with your friends. You know, it's exactly like the left fielder's motto of picking a sponsor who we know, like, and trust. No different. Lastly, Jim mentioned TriVest. That was also very instrumental for me in giving me the courage to dive into a deal. It allowed me to basically hedge my bet by investing with a group of friends rather than taking on the financial burden on my own. And through that experience, it basically allowed me to dive into other deals on my own. So that's basically all I got. I don't know if there's anything else you want me to touch upon, Jim, or talk about.
Yeah, could you just briefly talk about how many passive investing deals you were in prior to March of 2021 and how many you're in now on your own and in a tribe?
Prior to March, I was in zero. I didn't even know this space existed. It was brand new to me, all very new. I did my first deal, I believe, with my tribe in May of last year. Currently, I'm in about 6 deals through my tribes, one with my own and one with another with tribe, with you, Jim. And I forget I'm sorry, it's been a while since we met, so I forgot the name of our second
Tribations.
Tribations, yeah. That's I got 2 deals there, so six deals through tribes and another 5 on my own. And I've been really lucky because the process was very similar to what I do. I'm not sure if okay, there we go. I thought I lost you guys. It's pretty similar. I think I had this conversation with you, Jim, where it basically is like my job, where in my current position, I have to go vet and go approach brokers, if you will, who have to submit me insurance applications for deals that I have to underwrite. It's no different than the deal that I do, or the deal that we do in filtering out, finding new sponsors and syndicators, trying to identify if they're good or they're bad, and then you underwrite the deal. So it was real easy to make that transition, and it's really the tools of the Left Field Investors Community and the TriVest platform that really made it that much quicker. So I look back and I'm just kind of surprised that I'm in that many deals. But when you go into these deals with tribes, it makes it a lot easier.
That's fantastic, Alvin. Thank you so much for sharing your journey. I mean, 11 deals from 0 to 11 is fantastic. And you know what one of the things that powered you through that is TribeVest, you know, being able to get into more deals because of TribeVest and having a community. So that's fantastic. Thank you, Alvin, for your contributions.
You're a
And
chocolate.
we will move on to John, and he's going to talk about his first syndication deal.
Yeah, so John Bolt, I live in Grand Rapids, Michigan, and I'm a data security engineer at a healthcare system in this area. So nothing to do with real estate whatsoever. And I did not know that passive real estate investment was even a thing until this summer. Excuse me. Still have a little COVID voice from the past weekend here. So I had no idea that passive investing with real estate even existed. I assumed that when you got into it, you had to be active. And so that was very interesting to me to learn. And as soon as I learned it, I went into learning mode right away. And one of the things I did was listen to all the passive investing from left field podcasts and watch the available left field investor meetings on YouTube and just kind of dove in. And many of them I listened to multiple times. I'm a big walker, so I like to walk in the morning times in the summer, and so podcasts come naturally to me during that time. So there were several episodes of the podcast where syndicators were interviewed, and I decided after listening to all the podcasts and many of the syndicators to figure out which one I felt most comfortable with. And so the one that I felt comfortable with was Kenny Wolf from Wolf Investments, and he seems to be very popular with the left field investor group as a whole. So I began researching him. I watched many of his YouTube videos while continuing to learn more and more about passive investing by reading the Hands-Off Investor book by Brian Burke. And in addition, I joined the infield, of course, and started asking tons of questions there on the forum. So soon after doing all that, I decided to connect with Kenny via the typical new investor meeting. And I just felt very comfortable talking to him. He didn't treat me like a second-class person, even though I knew next to nothing about passive real estate other than what I had read or learned on my own. And I didn't have a lot of money to invest. He still treated me fantastic. And it was important that I also receive some buy-in from my wife on this type of investment structure, because I didn't have any money to invest in. So in order to invest, we had to take out a home equity line of credit. And we had been religiously paying down our mortgage for years and years and years. So that was a huge effort to try to get her on board with that, which is a change of mindset really from the Dave Ramsey style of paying down your mortgage to using debt effectively. So one of the things that was very helpful was that the left field investors had a meeting in person in Columbus with Kenny present. And so my wife and I were able to go down there and spend some time with Kenny and even look at one of the apartment buildings that he had done a value add deal there in Columbus, and gave us a tour of that facility. So that was really nice. So that's kind of how I ended up connecting with Kenny. As far as the deal that I chose itself, my first deal, I just went onto his website and I began looking at all the deals that were available. And I decided that it would probably be best for me to go with a typical multifamily value add cash flow right from the beginning sort of deal. I needed the cash flow from the beginning because I'm going to be using HELOC funds. So I don't want to be paying that interest rate on my own without having cash flow. So that made the most sense for me. And then I just took I think there were 4 of them. I took all 4 of them and just ran them through the deal analyzer. And as I did that, I reread sections of the Hands-Off Investor book to try to understand what some of the things, the terminology and that sort of thing meant as I went through analyzing my first deal. And eventually I had investigated enough where I felt that I understood as much of the deal as I was going to be able to. And I couldn't say necessarily that I was sold on the deal through my own analysis, because what do you have to compare with? So it was really my comfortability with Kenny and my trust in him that sold me on a deal. And of course, I didn't pick any deal. I picked the right deal for me that worked. I needed cash flow. Like I said, I wanted a value add. I wanted it to be multifamily apartment. That's the typical investment out there. And so it was really, I just want to make it clear that it was more Kenny than it was me using Deal Analyzer to vet that first deal. So in addition, my capital commitment was $25,000, which was half of what the minimum investment was. So that made me a little bit more comfortable about my decision versus trying to go all in at 50,000 right away. As I definitely don't need to lose any more sleep at night. So as far as the wire process, the wire transfer process, that was terrible. I had never sent a wire before, nor had I ever invested or spent $25,000 in a single transaction before. My vehicles have all been less than that. Even my down payment on my home has been less than that. So that was a huge amount of money, and it still is a huge amount of money for me. And in addition, this was home equity money that was going to cost me interest each month. So all of those things combined with my general inexperience of sending a wire in the first place caused me a lot of anxiety. I did not sleep well at night that first night after sending the wire. The following day, I did receive confirmation from Wolf Investments that the money was received and the portal was updated to show my investment information, and that was a huge relief to me, that it actually got there. It wasn't lost anywhere. I didn't lose money and just sent it away somewhere. So I slept much better the second night, and then about a month later, I received the first distribution, which that helps a lot too. You breathe a little bit more, a sigh of relief, knowing that, hey, this isn't just something that's theoretical. The system actually works. You actually do get money back out of this. So those things really helped a lot. So I would say to anyone that is new, there are definitely a couple of big hurdles that I had to cross and that I think anybody new needs to overcome with passive real estate investing. Education is certainly the first hurdle, and that can be overcome with reading books, listening to podcasts. Certainly joining a community helps a lot, where you can ask other people their questions and gain experience that way by talking to others and by getting to know the syndicator. So I think those couple of things, just getting to know people and getting to know the syndicator, is really the second hurdle, and figuring out the deal from there. It's getting past that, getting to know the system, those hurdles, and you'll be well on your way. So thanks.
That
for
was
listening.
great. That's great, John. Your story and Alvin's story, all I saw were people nodding their heads, right? Yes, we get it. The wire transfer, that is one of those things. I still get nervous about the wire transfer. But the first one, yeah, you don't know where it's going. You don't know what's going to happen. So I really appreciate both you contributing to this meeting and your contributions to both left field investors and the infield. It's people like you that keep this community going. And you can see that anyone can do this, right? A year ago, these guys had no idea what passive investing was, had no idea what syndications were. And now, you're taking out a mortgage on your house to invest, which makes complete sense. I do the same thing. Alvin's in a ton of deals and a couple of tribes. I mean, this is what it's all about. We have people in this group that are doing, that have done 50, 100 syndications. And then we have people that are just getting into their first ones. You got to start somewhere. So thank you, John. Thank you, Alvin. This was phenomenal input, and we really appreciate it. We're going to move right along to Steve Sue, who is going to talk about a deal that went full cycle, and that is what you want to hear. That is phenomenal. It was with Reliant self-storage, so I can't find Steve on my screen, but oh, there he is up in the corner.
Can I share my screen? Is that?
Yep, absolutely. Go for it.
Okay, let me see. Share screen. All right. So yeah, I had a couple of deals close this year, or I'm sorry, this past year. And one was just a boring apartment deal that had 20+% average analyzed return. So I decided, well, let's do this one. It's a self-storage deal. It was through Cash Flow Connections. They changed their name to ASIM Capital sometime about a year or two ago. But what they did was it was a fund, and they looked at buying. Let's see. Oh, by the way, can you guys see the screen?
Yes.
Okay. So there's they wanted to buy about 4 or 5 different assets, and so in the Southeast U.S. So they bought 2 in Bradenton, Florida, Woodstock, Georgia, Rock Hill, South Carolina, and Roswell, Georgia. And that was for a total of about 3,400 units. And they were going to also build new units on these 3 here. So they ended up with over 4,000 units, which obviously would increase your net operating income. And the total capitalization of this fund was over $67 million. So their type of deal was, the deals that they're looking for was to, add value to them, reposition them if they're mismanaged, and add more units. So the purchase date was 2017. I invested, since it was a fund, I invested later. Actually didn't really know about it until early 2018. And their projected hold time was 7 to 10 years. And each of the assets, they wanted to be in a pretty broad range here of cap rates, purchase cap rates, for 3 to 7 years. I'm sorry, 3 to 7%. And they didn't. There was no listings of what they thought the reversion cap rates were. So the preferred return was 7%, and the LPGP split was 70-30, which those are all pretty, pretty much average for the industry. What was interesting though, for self-storage, and this is one of 2 self-storage syndications I'm in, and the other one kind of reflects this as well. If you guys are in any multi-family syndications, in year 1, because of the bonus, 100% bonus depreciation, many of us have had 80, 90, even 100% bonus depreciation the first year. So you can see here, my depreciation in year 1 was 8%, and in year 2 was 8.7%. So nothing overwhelming. So I guess, again, my experience of self-storage is not that vast, but in the other deal that I was in, it was not very high either. So in terms of the bonus depreciation. So if you're looking for those passive losses in the first year, then self-storage may not be the first thing that you want to be investing in. I definitely would look to value add, B-class, C-class apartment deals. So it was sold on, the whole fund was sold in December. The whole time, at least for me, was 3.67 years. I think you could probably add 1 year for the entire fund. Now, they actually sold the Rock Hill asset in March of last year. And there was some, I wasn't sure if I really got a straight answer as to why that was. I got a bunch of different answers from the manager. I know there were some construction delays, partly because of COVID. And I guess some of the municipalities were slow to approve them for the construction. So that certainly doesn't help your NOI if you're relying on some of that to build up your number of units. And then in terms of the sale, I mean, it's let's say it's 4.5 years, and they had a projected hold time of 7 to 10 years. Of course, many of the assets these days are selling earlier. But typically when you see the sale, and I'm going to show the results here in a minute, but typically with the sale, when you look at the IRR, the annualized returns, they're pretty much on target or maybe even better than what you're gonna what you would see if it went full cycle. I mean, I'm sorry, if it went the entire projected hold time. So I'm going to show you actual returns. So what they had anticipated was if they held this for 10 years, they were thinking that this might be about a 9.6% return cash on cash. That's without the sale. And the actual was 2.1%. So not great, obviously. The IRR ended up being 11.3%, and the average annualized return was 12.8% for an equity multiple of 1.47. So if you've been in other deals, I'm sure many people who've been in apartment deals, they're in the 20+% returns. Now you also have to remember that this is tax advantage money. I'm not going to be paying any tax on any of this because of all my passive losses I have. So all in all, a 12.8% annualized return, I'm not going to complain about that. Now, is it my best deal? No, but have I lost money in other kinds of deals like oil and gas? Absolutely. So I'm happy with this. I'm not overly thrilled with it. It didn't really meet their targets, but again, I am probably going to, this just sold a few weeks ago, so I'm going to probably circle around to Reliant, who is the manager of this, and just kind of ask them some questions, because if Reliant is a huge player in the self-storage market, and if I'm going to ever invest with them, I'd like to see, what their take was on this, because the Rock Hill asset actually was purchased by another syndicator that's well known to this group, and he ended up selling that from March, I think it was maybe September, and he made a pretty nice return for their investors. So to me, it's like, why did he sell that? And I'm still not really sure as to why this all happened. But again, I'm okay with the returns. But I thought I'd show this one instead of my 20+% annualized return on an apartment deal, which is, I think others going to show their deals. So that's all I had for this one.
Awesome. Thank you, Steve. That's, it's funny when you look at that and you're kind of saying, oh man, I only got a 12.8% tax-free return, right? I think if you'd asked, not to pick on anybody, but Alvin last year, if he'd be happy in the stock market with a 12% return with no tax implications, I think everybody would be pretty pleased with that. And this is a deal that, I only got 1.47 multiple. That's still pretty awesome. And that's why we're in this. So thanks for sharing that. That's fantastic. All right, we're going to move right along to Ryan Stieg. He's going to talk. He's another one of our founders. He's the only one that is outside of Columbus. He's in Montana, and he is going to talk to us about his tribe and some of the investments in the tribe.
All right, thanks, Jim. I'll give a quick little backstory on our tribe. We talked about, some of us discussing our deals that we're in, some of us discussing exited deals. But Jim and I, that's how our relationship started, is we actually met, and some of you've heard this story before on the podcast, but we actually met at a Western Wealth Capital property and started discussing that was how we invested in deals. Those were some of the ones that we were in. And Jim knew about TribeVest at the time and was kind of talking to the idea about the idea with me. And so that's where we originally connected, is at that event, I think, Jim, late 2018. We connected and kept in touch and started to talk about putting together a TribeVest deal or group. And so we eventually got to a group of members who Jim and I were the only ones with experience investing in syndications, and we brought along a few others with us who were along for the ride and ready to get some experience too. So we formed our tribe in late 19, and our first investment was in 20. So that'd be interesting for those of you that are looking into TribeVest or looking into a tribe or just getting into your first ones to take a look at what we've done over the past couple of years. I will start with one of, and our first and only exited deal so far. Some of you may be in this one. All right, are you able to see, everybody see the screen there?
Yes.
Okay. So the first exited deal that we had just paid about a month ago. This was Murfreesboro. This was a Reliant deal through the Reliant Wealth Formula Group. It was 1,200 total units among a couple different properties, a self-storage deal. Purchased in August of 2020. You can see a few of the additional details here at 65% LTV, projected to be a 6-year hold, 4% purchase and 5.5% revision cap. Similar to what Steve said too, we had an 8% pref with a 75 or 70-30 split over that. Projected return of 102 and a projected cash on cash return of 16%. This deal turned quickly, in our mind anyway, or what most of us are used to. Total investment hold time was 450 days before it sold. And so this one actually had a 43% annual return, average return, 1.53 equity multiple. It had paid up until the sale date, it had paid a 4% quarterly return and ended up paying a total of a total return of 53.4% in just over a year's period of time. So for those that were new to our tribe, that was a really good experience for them to have, and not have to wait as long as most of us do for that first deal to exit. So that was our first deal that had exited, and I'm going to pull over now to our tribe to give you a summary of that. So this is a breakdown of all the assets that we're in. And Jim, I'm getting a little bit of feedback. Is it coming from my line?
Yeah, I don't know. Someone needs to mute. I've been looking and I don't know who it is, but if that's your background noise, if you could mute, please. If everyone who's not speaking can mute, that'd be great.
So in our tribe, like I said, we formed the group in 19, and we got our first Western Wealth Capital, which is again where Jim and I started, and had agreed that we would start investing in all of their deals. We all wanted diversification, we all wanted lower minimums, and we wanted to get into deals before we started to spread out and go to different syndicators. So you can see here our summary now since the beginning of 20 is 31 total assets. We got into 7 in 2020, and then we really kicked up the pace. All of the members agreed to up the ante a little bit. And so in 21, we got into a total of 24 new deals. Over the past almost 2 years now, we've spread our wings a little bit. We're now invested with 7 unique sponsors, and we've exited 1 deal. So you can see we've got a lot of Western Wealth Capital here. The Murfreesboro one was one of our first ones. What we agreed to too is not to, we had originally gone in pretty heavy with value add, and now we've diversified into more of a cash flow play too with MAG. Some of you who are familiar with MAG, that's more of a cash flow play. So we've got that along with several others that we've started to invest with now. Matt is in the audience with us today. We're in one with him, and we're also in that Cohen Esri fund as well. So you can see here we agreed we wanted to get in at the minimum, and so that's virtually every one of them is which one we've got in at the minimum deal. We've got total income here. So this is, you can see there isn't a lot of total return yet on some of these early deals, and then some of them have no cash returns yet. And then down here at the bottom, you can see the beginning and the exit for Murfreesboro too, with a 53+% return. So where we are at right now is at kind of a great spot now. We're not taking any distributions from our tribe, but we're to the point now where we have returns that we're just rolling forward into deals. So with this Murfreesboro exit, now we are at the point where we're not contributing anymore for the next several deals. We've got enough return in the bank now where we can get into more deals at the minimums and not have to contribute anymore. So we thought that'd be a good experience for everybody who's, whether you're at the beginning of your journey or at the end or very much experienced, what these tribes can do. It's allowed Jim and I to diversify much more by sponsor, geographically, and by asset class, and than we ever would be able to alone. So I thought that would be a good summary. And unless there's any questions, I'll turn it back over and to whoever's next, Jim.
Hey, Ryan, let me jump in with a quick question. Might be interesting for people to know how many people, and if you said it, I'm sorry, I missed it. How many people are in this tribe?
In this one, good question, Sean. In this one, there's 5.
And we just had a question, Ryan, and it's how is the contributions and ownership splits? How is that done? And for this one, Ryan is managing it. So we all contribute the same amount, 20%, because there's 5 of us. And then I think we all gave Ryan an extra half point, maybe. So we all have 19 and a half, and he has 21 and a half or something, whatever the math ends up. He has a little bit more on the coming out side because of the work that he does with, this is a lot to manage. We should probably pay him more. But there's also another question. How complicated are the taxes? So you want to talk about that real quick, Ryan?
Yeah, so good question. We've only done the taxes for 2020. One of the things that we got all of our K-1s. We had my accountant do the tax returns. It really felt like an easier process than it probably would have been. I'd say the biggest hassle or the biggest concern, I should say, was those that aren't used to filing extensions were uncomfortable with filing extensions, but that's just part of the game in these syndications. So really, it wasn't a very complicated process. It's all passed through and goes down to us individually from the entity. But I hopefully, knock on wood, it doesn't get more complicated, which it will with more deals. But it wasn't a terrible process to do that. We just funneled everything through my CPA.
Yeah, and Mark asked, how much does it cost to file an extension? I filed an extension last year and it didn't cost me anything. You still have to pay an estimate of taxes, and then you just get a refund or pay more later, but it doesn't cost anything as far as I know to file an extension. And can you join individually, or is an LLC required? For TribeVest, you can join individually, and then the LLC is formed through TribeVest. You could also contribute to TribeVest with your LLC if you wanted to, but then you'd be an LLC inside an LLC inside an LLC. It gets a little bit complicated. But in fact, that's what we did with our tribe and the Cohen Esri deal. Any other questions for Ryan? As usual, we overpacked the agenda. So I'm sorry, Chad, you're cut, you're out. If anyone wants to hear about the Wolf Commercial Real Estate Fund, then when we go to the networking in Wonder Me, crawl on over or run. I don't know how you move around in Wonder Me, but you can go over to Chad and he'll tell you all about it. At this point, we're going to move on to Sean Donnelly. And I didn't mention Chad is also one of our founders of LFI. So you're going to hear from all of them today. The next one is, I guess you're not going to hear from Chad. Sorry, Chad. But you are going to hear from
all
Sean.
All but one. Sure, that's fine.
Sorry, Chad. Go ahead. Sean's going to talk about the survey. We sent a survey to all the infielders, and he's going to talk about the results. Some of the questions are the same ones we did last year. Fantastic results. Amazing. Go for it, Sean.
Yeah, let me just share my screen here.
Real quick, while you're doing that, there is one K1 per deal. Yes, but it goes to the K1 from the syndicator goes to the tribe LLC, and then all of those are aggregated. A tax return is from the LLC, and that gives each individual their K1. So hopefully that answered that. Sorry, Sean, I just noticed that question, but go ahead.
No, you're fine. You're fine. Give me a thumbs up, head shake. Everybody see my screen, I presume, right? We are going to send this out.
Sean, can you blow it up some? It is a little difficult to read.
Yeah, I was trying to keep it all on there. So
yeah,
here, let's blow up the first section, and then I'll move to the second section after we're done.
Thank you.
How's that? Is that better?
That's better. Yeah.
All right, perfect. Thanks, Chad. As I was saying, we will send this out in our after call email that goes out. So don't worry about trying to gather your thoughts around all these numbers or take notes or anything like that. You'll have some time that you can spend with it. But as Jim said, we sent this out to all the infielders, and we had 87 responses, which was awesome. I think right now our infielder, or at the end of the year when this survey went out, the infielder count was around 150, 160. So more than 50% response rate, which is awesome. Most of these numbers are the averages from the 87 respondents, and I'll try to highlight when we don't have an average versus when we do. Again, this is just 2021 data. There is some 2020 data in here for comparison. And we'll start off there with our community. So roughly this time last year when we sent out a survey, we had about 56 total members. So that's infield and otherwise in the left field investing community. And we, again, as the survey, the date of this survey, we were 551, and it's gone up since then even. So not bad growth there, which I think is awesome. Again, this is infield as well as the general community population, if you will. So great growth there. Thanks to all of you for spreading the word, for coming to our website, going to our website, listening to the podcast, spreading the word, getting our name out there. And we hope to do some more of that this week in LA to keep this community growing. As everybody knows, it's a very diverse background. Lots of people still working W-2s, some people not working W-2s of varying experience levels, and then also investing experience levels as well. And that's truly what makes this community great, is we're learning from each other. So if we move into syndications, these are averages. Again, of the 87 respondents, we had last year, the average was just under 7 total passive deals that people were investing in. And in 2021, that jumped to 11. Obviously, bigger community, but also those that were in the community last year were, they had already gotten their feet wet and they're feeling more comfortable going into additional deals. So that was a nice jump there. We don't know what was added in 2020 from 2019 because we did not do a survey, right? We formed CPIG, as Jim mentioned, back in March, April-ish of 19, so we didn't do a survey. But we do know going from 20 to 21, the average number of deals added to an investor's total portfolio was 6. So that's, again, we have to assume that's, 6 is a big number, so we have to assume that's a good growth there from what 19 to 20 would have been. Again, staying with averages, investment in new deals just in 2020 was roughly $300,000, and it jumped to $400,000 this year. Again, that is an average number of one individual investor and their funds being deployed throughout 2021, jumping to roughly $400,000. And then if we look at total passive income for members in our infield community and those that responded, it was roughly $16,000 in annual passive income going to an investor. And this year, it's just under $40,000 in total passive income. So that's, if you want to talk about, say, inception to date. So from the time that they began passive investing until the end of 2021, it was just under $40,000, with roughly $10,000 of new annual passive income being added in 2021. So again, just phenomenal growth from folks in our community. It's an awesome, I think, testament to the due diligence that's going on out there, as well as people just talking and feeling more comfortable with sharing information. And we'll get into the interviewing of sponsors, but certainly getting more comfortable with the entire process of investing passively. Maybe not the wire process, but the rest of it, certainly getting a little bit more comfortable in your arms around. In 2020, again, these are averages. So we're sticking with averages here. The average passive investor in our community spoke to /screened /interviewed 2 sponsors, 2 unique sponsors, two separate sponsors, 2 individual sponsors. And this, it was 9. We don't know what the individual numbers were in 2020, but the average individual, and we had some in the survey, it was referred to as a unique sponsor. So if you think about unique sponsor being an individual sponsor or a specific sponsor, it was 5 was the average individual sponsor that one of our investors supported. Any given individual supported was 5, which is great. I'm getting a message here. My internet is unstable. You guys hear me all right still?
Yep, you're good.
All right. So asset classes, the top three when we did our survey in 2020, not surprisingly, is multifamily, self-storage, and ATMs. This year, not a lot of change, except mobile home parks came in there to tie ATMs, and it is in that order. So multifamily is number one, self-storage number two, ATMs and mobile home parks number three, as far as percentage of funds being deployed in your overall portfolio. And that shouldn't be surprising because, quite honestly, passive investing and the number of sponsors out there do revolve around multifamily, and that's where the bulk of the opportunities that come across our desks come from, is the multifamily space. Before I get into the second half, and I know we're running short on time, Jim, but I pulled some other things from the survey that I thought might be interesting to highlight with this top half of the sheet. And if we look at the number of passive deals, right, in a portfolio, being the average number being 11, for those that are curious, we've got anywhere from 83 in a total portfolio by an investor, 75, 50, 30, 25. And then of course we've got some that haven't, they're in our community, but they're still doing some due diligence. They're still interviewing sponsors, but they haven't pulled the trigger for numerous reasons. So on the low end, we go anywhere from 0 to 1 to 4 to 6 to 8 to 10. So, we go from 0, somebody's invested in 0, but looking to invest in 2022 into their first deal, all the way up to 83 deals in 2021. I just think those are unbelievable numbers. As far as new deals added in 2021, again, we go all the way from 0, somebody's still doing their due diligence, trying to figure out what this is all about, to 32 being added to their portfolio just in 2021. And we had somebody in our survey, and within our community, that did 30 passive deals in 2021. So jumped in, got their feet wet, liked what they were doing, and man, they ripped that Band-Aid off and went for it with 30 passive deals all in 2021. So that's pretty cool. As far as total invested in a portfolio, we go from people that have invested from $5,000 all the way up to $8 million. And again, that's if you think about inception to date, so the time which they began investing in passive deals. So that could be 2015, 16, 17, whatever the case may be, but their total portfolio ranging from somebody at $5,000 all the way up to $8 million. So again, I think these are just, powerful high or max numbers, if you will, coming out of our community. And then just one last one, as far as total income goes, again, just under $40,000 is an average. And we've got investors anywhere from $50 to $700,000 in annual income coming from the deals that they're invested in. All right, so let's go back to the top real quick. I just want some totals across the 87 respondents. That's a total of $57.5 million invested in passive deals. And again, that's an inception to date. So whenever those people began investing in their individual deals up to the end of the year. And we've got 11% who are earning $100,000 or more in passive income annually. All right. So let's blow this up just a little bit more. Podcast, just a little shout out here to Jim and all the people that have, I suppose, been fortunate enough to be interviewed by him or to be put through the rigmarole or be asked his questions. We do thank you for your time, no doubt. Here's the success of the podcast, more so to our guests than our hosts for sure, right?
Absolutely.
47 episodes, big guy.
Over
13,000 downloads. It made his hair fall out. He's putting a lot of effort in. Look at him.
He is.
That's right.
He is yeoman's work for sure. Putting in a lot of work to this thing, and it's paying off. And ranked top 3% in the world, man. Way to go.
Yeah. Thanks.
So thanks to all of you for tuning in every week, downloading, sending forward ideas and possible guests and things like that, because we, the 4 other founders, recognize the job that Jim is doing. This is largely on his shoulders, and we certainly appreciate the fact that it has been as successful as it has, and obviously wouldn't be to this level if it wasn't for you guys listening in. So, so let's close out a little bit with just some tribes, since you know, Ryan was kind enough to go through some tribe information, and as you guys know, TribeVest is a huge sponsor of ours, big partner of ours, and we do a lot with TribeVest, both currently and hopefully looking into the future. 42% of the respondents joined a tribe in 2021. 16% are in more than one tribe. 54 are currently in one tribe. 32% currently in more than one. And this member max is really what I would refer to as more of a high number. The number that is the highest tribes for a member, and that's 6. So we've got an individual that is in 6 different tribes. And then the members total, so all 87 respondents, if you just do a sum total of all the tribes that exist out there for the respondents in our survey, there's 84 tribes that are active right now. And obviously varying degrees of activity. I mean, Ryan was great in his example. I mean, that's a very, very active tribe. And then we've got some that just, you know, were just created in December, and the LLC paperwork, the ink's probably not, or it's just dry. There's no distributions yet because we're waiting on the sponsor to, you know, start kicking those out. So we've got, you know, as I spoke earlier, as far as experience levels go, it goes for tribes too. We've got people that have been in tribes for a number of years, and they're going strong. We've got people that are just getting their feet wet in the tribe space. So huge shout out to all of you who have given that a go, and thanks to TribeVest for their continued support of Left Field Investors. And then we had one last question, just trying to gauge, you know, get a sense where people's heads are for 2022 and looking forward. And so the average number of deals that people are looking to get into, again, this is you know, our sample size from our respondents is 5 deals and an average investing of $26,500. Now, certainly, if you look at those 2 data points in relation to some of this data that was up here further, it doesn't, on the surface, it doesn't seem to track or make sense. But if you look at how the survey was answered, a lot of the people that were really, really active in 2021, either with new deals or adding to their current portfolio, kind of drop off and aren't looking, or at least planning to be as active in 2022. And then we have a fair amount of people who were not terribly active in 2021, and they're looking to be active in 2022. So that's where you get the average of 5 deals and $26,500 being invested in 2022. My guess is this time next year, when we do our survey, that actual number will be different because we're already seeing 19 months into the, or 18, what does it say? Yeah, 18 months into the new year. There's been deal flow coming from sponsors that has been, I think, more active than this time last year. So I think people are going to invest more in more deals, and more money is going to be deployed than what we're actually thinking. But that's just my 2 cents. So what's not on here, but because we discussed full cycle deals, there was a high, an investor exited 8 deals. So that was, I thought, a pretty cool question and survey answer that we got to, and I just didn't put it on here. But those are happening beyond Ryan and Steve's deal. So if there's any questions, but feel free to.
If you have questions, I'm going to ask that you visit him and Wonder Me, because we are, I like to finish in an hour. Unfortunately, we're going to go over a little bit. I will answer a couple questions in the comments real quick. Are all these individual deals or the deals through CrowdStreet, Equity Multiple, et cetera? We don't know. Most of them are probably typical syndications. Few are probably the CrowdStreet, Equity Multiple type. And some of them, a lot of them are probably through TribeVest as well. And then the other question, are you able to invest using retirement account money in an SDIRA? Yes, you can. In syndications, you lose some of the tax advantages, but you can. So thank you very much, Sean. I don't mean to rush at the end here, but like I said, we try to end in an hour, and we're not going to do it because there's a couple things we still need to do. and I am going to forget, we need to do the drawing. Actually, I'm going to do the drawing later. I promise I will do it. We had 51 people sign up for the drawing that responded. So we're going to send one of them a book and one of them a mug, and we'll announce that in the newsletter tomorrow. So my apologies, but we got to get moving on because I need to talk about plans for 2022. And this is going to be abbreviated again, because we are running out of time. So the things that we want to do in 2022, we want to have increased networking. I am fortunate that I probably talked to 200 people this year, just from people that called up and wanted to talk about left field investors. So I know many of you, but the problem is that most of you don't know each other, and these meetings run long. So we run out of time to network, and it's uncomfortable networking on Zoom anyway. Wonder Me is going to be better, but it's still not ideal. So we're going to have a couple of ways that we can get together and network more. And the two that we're going to try is, one is called Intros. David Shirky kind of turned me on to this. It's an app. I will send out instructions, but this is going to be for everybody. And basically what you do is you sign up if you want to, and it'll ask you a few questions, and then it will match you up with someone else in left field investors, and it will help you schedule a time to talk to them. And then you just get on the call and you have a conversation. It's just connecting people. It's how I got to know Ryan so well, is we just decided to do that on our own, and we ended up becoming friends. He ended up becoming part of our group. We did a tribe together. We went to a football game together. Now we're buddies. And that's what we're trying to do, because the power of community, you saw it in those statistics. For me, what I've realized over the last 2 years is that you need to be part of a community if you want to be an effective investor. I strongly believe that. It doesn't have to be this community. I think this is the best one out there. I'm obviously biased, but you need to have a network and a community to help you invest. And so we're going to try to help you meet people through intros. Tomorrow, I will send out an email that will explain it. I hope everyone joins and gives it a shot. If you don't like it, it's very easy to turn off or ignore. So the second thing we're going to do, and we'll send out an email about this as well, is we are going to do some, and this is mainly, we're going to start this in the infield and see how it goes. So if you're an infield member, you'll get an email on this as well, where we are going to have informal meetings where one of the 5 founders will host a meeting. They'll tell you the time and the place. It'll be either Zoom it'll be either Clubhouse probably, which is just an audio app where you can join a room and talk, or Wonder Me, which we're going to demo later. And it will be just no agenda. You show up, it could be 2 people in the room, it could be 30, and there'll be different times. Some people do it lunchtime, East Coast time, lunchtime in Montana. I think Steve is going to do it at night for people that want to do meet at night. So it's going to be very informal. There's going to be no agenda, and it's just going to be another way for people to meet each other and talk, because we run out of time at these meetings, as you can see. So that's another way we're going to work on networking in 2022. We're also going to work on deal access. And what we're going to do for that is, we're not quite sure. Chad, who didn't get to speak today, he and I are talking to a lot of different people, trying to figure out what's the best way for us to approach deal access. We presented a couple of deals last year, Cohen Esri and Accountable Equity EIF Fund. And we started on the mobile home fund with Cook Properties. And, we were able to get people lower minimums or higher returns. And I'm not exactly sure how it's going to be structured, but we're going to work on that. And that'll be coming hopefully second quarter of this year. We're going to have some deal access. And again, that will probably mostly benefit the infielder group. You're welcome to join. Also with the infielders, there'll be more information coming about this, but we're coming up for a year, and your membership was 1 year, and we're going to change it to monthly after the initial year. So it'll be $15 a month after the first year. It was $199 for the first year, and we're going to $15 a month. The last thing, and again, I'm sorry I'm rushing through this, but we're going to try to do an in-person meeting. It will be in Columbus. We're going to have some syndicators that will come join us. We're hoping Matt Piceni, who I think he's still on this call, hoping he will be one of them. We'll probably have Kenny Wolf. We'll probably have Mag that will come up, and maybe a couple others. It will be an evening, and then the next day. We were thinking about April, but I think with COVID, we're going to postpone it to either May or October. But more information will come out about that. So I know I went through all that 2 plans for 2022 pretty quickly. But, you know, I just want to thank everybody that's part of this group. This has grown beyond our wildest dreams when we started CPIG as a 12-person dinner club in March of 2020. And we still haven't met in person because of COVID. And now we have almost 600 members. We have a website, we have a podcast, we have a brand, we have a membership group, and we're just gonna keep growing. And we're not growing for growth's sake, but every time someone new joins this group, they add something. And if we can get more like-minded people to be part of this group, then we can generate some revenue so that we can continue building out our tools. You know, our tools for the infielders are in their phase 1. We need to move on to phase 2, phase 3, phase 4, and really make these tools something great. And that is also on our list for 2022. So I want to pause real quick because there's some questions in the chat. So I think Steve, did you post the link to Wonder Me?
Yep, it's active right now, and it's if you scroll up, you can see it up there. It's wonder.me.
Okay, can you post it again at the bottom?
Yeah, sure.
So
it's the password is all capitals LFI 22. You do need a laptop or a computer, unfortunately, for this. But once you get in there, it's pretty cool because you can actually move around. I put some different little areas or sections in there. I think there's 9 different sections, multifamily, self-storage, industrial, etc. So you can kind of go to wherever you are interested in and meet up with people who are interested in the same thing. If you want to see yourself, like on Zoom, you can actually click on the upper right picture of yourself and get in there. I can already see people moving into that space right now. Yeah, I think the founders are going to kind of stay in one spot if you want to ask us questions. But feel free to move around. And if you want to meet up one-on-one with someone, you can also do that anywhere on the screen. So
perfect.
yeah, and apologize for the people who are on the phones or on a tablet. You cannot do that, unfortunately, on this yet. So hopefully you can switch over to a laptop if you want. But I think hopefully we can get a bunch of people on here and have 100 different conversations.
Yeah, so this is going to be our networking. Again, we went over a little bit, but all of the founders, on behalf of everybody, we want to thank you for being part of our community. And if you ever have any questions, you can reach out to all of us. All of us have emails with their first name at leftfieldinvestors.com. So you can send us emails and, connect with us on email, or go to Wonder Me right now and connect. So thank you very much. We're looking forward to a fantastic 2022. We will see you all February 28th with the speaker TBD. Thank you all. I'm going to leave this open for a couple of minutes while people get into Wonder Me. So thanks for coming.